We were joking that that green shirt might have actually been the bottom in the market short term after we wore the shirt for about 3 to 4 days in a row. Maybe that was the bottom. All right, a little fun with you there. Today's Monday. We're right back at it. Hopefully you had a good weekend. And I'll tell you something funny in the middle here in just a moment about Jax and my granddaughter. Hello, Fayez, Lena, BJ, Dom, Billy, Will, Doug, and many others. We also have Barbara Armstrong in the chat. We welcome her. And many of you saw her at the Chicago event at the Advanced Options. And so it was great to see that. And she did post about that on her X account. Now, just real quick, today's topic, as always, is trading with technical indicators. And when we talk about trading with technical indicators, it could be price, volume, the combination of that, technical analysis, could be oscillators, right? All of the above. Today, we're going to kind of piggyback off the topic that we actually talked about last week and take it one step forward, okay? Now, be prepared. On the opposite side of the disclosures, I'm going to give you an in-class midterm exam, okay? So be prepared, okay? Now, just real quick, the information before we get started, the information is provided for general informational purposes only. Options carry a high level of risk, not suitable for all investors. When we talk about examples, they will be done in the Paper Money software application. Schwab does not recommend the use of technical analysis as a sole means of investment research. Like we said before, there's other analysis like fundamental analysis, macro analysis, intermarket analysis. It'd be very sad if someone only thought technical analysis was telling you the full picture of what's going on. Boy, that would be sad. Ooh, couldn't imagine. Now, also remember that investing involves risk, including loss of principal. Now, today, what I want to really do first is I want to actually just give you a quiz in class, okay? Midterm, if you will. It's actually going to be 8 questions, so be prepared to type, okay? Then we'll talk about markets and sectors, kind of just some of the differences we're seeing right now on markets and sectors. Then we're going to talk about short-term bounce entry setups after a diagonal breakout. And then what we're going to do is we're going to also talk about some shorter-term support bounce examples of ones that haven't pulled back, okay? And then we're going to look at some stock option examples. So let me do this first. I'm just going to go back. We're going to kind of leave it on this page. Let me administer this test. And I've been waiting for this, okay? Now, so last week we actually showed this. And this was the link from last week's class. So if you said, hey, I didn't attend last week's class, so I'm not sure how well I can do on this exam. We talked about last week diagonal breakouts, 101 series, 201, 301, etc. Hopefully you had a chance to listen to that. If you haven't, I'd go through it 2, 3, 4 times, okay? We want to actually kind of try to increase the odds potentially of potentially benefiting, perhaps, from education, okay? We're trying to increase probability of growing financial accounts, okay? Not a recommendation, but we're trying to get educated to see if that's something we might consider. Now, what I want to do now here is let's kind of go over the questions, okay? So question number 1, are you ready? Okay, is when do you tend to see diagonal breakouts? And let me give you a little hint to this. So let me lead you a little bit. How does that relate to the VIX? Okay, when do you tend to see diagonal breakouts? Let me lead you a little bit farther. Is it when the VIX is low and the VIX is in the middle? Is it when the VIX is high? When is it? So if we gave the answer to that question, when do we tend to see the diagonal breakouts? It's when the VIX is high, okay, and falling down. Now, I don't know if you've seen it, but the VIX was at 30 and it crashed. And we even labeled that in last week's Wednesday class, VIX crashing, okay? So funny how it could be so fearful and then where'd all the fear go, okay? Fear is like smoke. You saw it initially, but then you don't see it a lot of times. Okay, it's funny how that keeps playing out. Okay, so question answer number 1. Answer to the number 1 question was you tend to see diagonal breakouts when the VIX is high and falling. Okay, now second question is what is the minimum length in terms of days when in terms of how I talked about drawing diagonal levels of resistance? What was the minimum length in days to draw diagonal resistance? And I'm not going to lead you on this one, okay? Because we talked about a minimum length of time, okay? Now, so if we take a look at this, the answer to that question, what is the minimum length of time to draw a diagonal resistance? The answer we gave was focus on 10 days or more. Why? Well, because it takes time to actually get a resistance, okay? 9 to 10 days, we just kind of said 10 days or more. 10 days or more would be 10 trading days. So we're talking about 2 weeks, okay, or more, 10 days. Now, third question is, in drawing diagonal resistance, does the investor draw from the middle of the candles or the top rights of the bodies of the candles? What did we actually kind of educate on that last week? Drawing from the middle of the candles in drawing the resistance line or the top rights of the bodies of the candles? Answer? Some of you are thinking, I need a quarter here to flip, okay? The answer is we talk about top rights of the bodies of the candles to really get the angle of resistance, okay? Now, fourth question. With diagonal breakouts, an investor should see higher volume. True or false? That was false. Kind of went fanatical about that last week. Said in many examples, you're not going to see higher volume typically. Very unlikely. Okay, and we talk about why. Now, fifth question. Diagonal breakout could be a bearish trader's exit and a bullish investor's entry. Let me repeat that. A diagonal breakout could be a bearish trader's exit and a bullish investor's entry. Yes or no? Or we could say true or false. Okay? So we would actually say to that, yeah, true. We talked about kind of what's causing that diagonal breakout to happen. And a bearish investor, if we have a bearish trader and they're short stock, we talked about if they want to get out of the position, they buy shares of stock. So that could be a bearish investor's exit. Yes. Second part of that is if a bullish investor sees a breakout, a moving average crossover, example, all the above, could that be the bullish investor's entry? True. Okay. Could be. Yes. Now, a diagonal breakout is someone that's trading a diagonal breakout is only focusing on price return or price return plus volatility contraction. So someone that's trading a diagonal breakout is that they're just only focusing on the price return potential, or are they trying to get price return and volatility contraction? God, we talked about that as well. Feel bad for the people that didn't listen to the class last week. Because now they're thinking, oh, geez, I was going to do it and I've dog ate my homework. Don't even have a dog, but it still ate my homework. So the biggest actually thing is, it's actually the price return, but it's also the volatility contraction. Sometimes that volatility contraction could be a pretty decent percent of the price return as well. Question 7, last two, okay? Some strategies an investor might consider on a diagonal breakout. What did we talk about? I think we talked about ad nauseum dollar cost averaging. We talked about dollar cost averaging up, right? We talked about ATR, okay? Gave you homework assignment to practice on that, okay? So that's number one, dollar cost averaging. Don't have to put it all in at once, okay? Second strategy we talked about is a short put, okay? Vertical. Define risk, a credit trade, probability based, okay? The third strategy we talked about is a short wide put spread, which you could say is a cash secured put with downside protection, okay? Just a wider spread. Fourth strategy we talked about is a long call vertical, okay? But the investor, if they're trying to play the volatility contraction, they're really focusing on selling strategies for the most part. Does that mean they can't do buying strategies? Of course not. But they're trying to focus on using the volatility to get a bigger premium. The bigger the premium, the lower the break even, okay? And maybe the better the probability that they might be right. Now, last question is, how do you define a diagonal breakout, okay? Now, this should not be like, well, in 30 minutes, I'm going to give you the answer, okay? So number one we talked about is we're looking for something that's had a pullback, where we've actually seen that it's, we could draw a diagonal resistance of 10 days or longer. Fine, we already said that. In simple layman terms, we're really looking for the open and close, O/C, open and close, greater than the R, greater than resistance. In other words, when I'm looking at that candle, is the open and close greater than resistance? Okay, I'm not speaking French right now. I want to make sure I just speak normal here for just a second. I'm going to come back to the resistance. Not right now. Okay, too serious. And then what you're now going to see is we want to see the closing price, C, above the open, greater than the open price. And really what this is going to look like is just a green candle. Probably could have used a green color. We're just looking for a green candle, okay? Green candle above the resistance line. All right, now, so first off, how did you do on the test? How'd you do? Okay, now if you said, hey, now by the way, I mean this seriously, if you said I'm a little light on this diagonal breakout concept, as a teacher, I would feel bad for the client, the student. I'd feel bad because this is something, if you think about this, this could be short-term flags, this could be intermediate flags, this could be long-term flags. This is not an area that you want to be like out of 10, maybe a 3 on. It's not an area that you want to be a weaker on. Now, what I want to do is let's kind of now go to just real quick, talk about the markets real quick, and then we're going to focus on that step 2 of the diagonal breakout, okay? So what I want to do is I want to pull up just real quick. Let's just pull up the kind of the indexes and kind of see where we are, okay? So we said when we look at the trend, we're trying to kind of always teach 1 week ahead of time so we know as investors what we might potentially expect, okay? So what we see on the indexes from SPX all the way down to the SOX, we see that on there we have on the indexes their trend 2, price above the 10-day moving average but not the 30. This is that diagonal breakout we've been talking about. Now, the other thing that's kind of nice is when we look at the VIX, okay, and we look at the international VIX, okay, Japanese yen, you're seeing that those are both down. You got trend number 1 actually on the VIX and trend number 5 on the Japanese yen, which many investors would say, hey, that usually could be a tailwind for stocks in a good way. Could that repeat itself? Now, the differences we see here on sectors here today is when we look at the sectors, kind of list those, you're going to see there's more sectors that are showing 2s. And we also see a couple sectors that are really in 3s, okay? Now, we see healthcare that's actually in trend 3. We see even energy in trend 3. Now, we talked about Chevron last week, and Chevron's had a nice little push. And what you're now going to notice is we'll talk about Baker Hughes in just a second. But we see on energy a little trend 3, healthcare trend 3, and the others in 2 so far, okay? Now, what I want to do is I want to just come to just real quick, kind of talk about the agenda item we talked about, which is what happens if you have a diagonal breakout and you missed it and you didn't practice in the paid money account. Well, we talked about in terms of homework, you didn't practice buy stops, didn't practice buy stop limit orders, didn't practice actually maybe dollar cost averaging that we've been talking about for about 2 weeks, okay? Let's say you didn't do it, okay? Whatever the reason, okay? Now, what I want to do is let's imagine the investor says, okay, there's a diagonal breakout on the chart, but now where's the potential entry set up after the breakout? And I want to go back to just real quick, a couple stocks that we've talked about, and I want to bring up just real quick Palantir, okay? Now, Palantir is an example that we did, and I want to just bring this up for our example, okay? Now, let's imagine that on this chart that I said, hey, I'm going to draw a diagonal line from the top right to the bodies of the candles. Now, how do we draw it? Do we draw it from like here? Do we draw it a little lower? Now, remember I said this, okay? He or she or he, that actually draws the diagonal line hitting the most number of candles is probably the winner in terms of how most see the diagonal resistance line, okay? Now, so if we looked and said, okay, so let's imagine that we were right here. And then we go forward to the very next day and say, are we making a diagonal resistance breakout? Now, we already defined that. We said we want the open and closing price above the resistance line. We can definitively say, no, doesn't even meet criteria number 1. Next, we go forward to the very next day. Did we open and close above the resistance on that day? Just yes or no, okay? Now, the reason why we kind of use a definition is we're trying to get out of the gray world of maybe, okay? And so what you're going to now see is if we said that yellow line is resistance and we open and close above the resistance, well, that would actually be meet definition number one, okay? Now, definition number two is we wanted the closing price above the open. Why? Because we don't want something that gaps up and then rallies and fades and closes lower. We want something that actually, where the open and close are above the resistance, it is. But second, okay, is the closing price above the open? And the answer is barely, but it was. All right? Now, so if someone was trading the breakout, that's the first entry day if we were kind of based on where we were starting. Now, let's say the investor says, but I didn't get in because I was scared, okay? And we had all these things going on and it was just scary, okay? And all of a sudden, the next day, the stock goes down. Now, sometimes that can happen, okay? Just because someone takes a diagonal breakout day, horizontal breakout day, doesn't mean that that's guaranteed to go up. We talked about that. The very next day, it goes down. And if it goes down, what does that probably mean? It just means that you have a risk of being stomped out if you actually set a stop, okay? If you did a trade where you set a stop, you didn't do like a married put that we've been talking about, okay? Now, I want you to kind of notice the very next day, okay? So the very next day, what you see is we got the red candle, and the very next day, when I say the very next day, I'm talking about this where I'm arrowing. What do you notice the very next day? So this was the diagonal breakout day. We're going to label it as number uno. If someone took the entry, that was probably the first time they saw it. But I didn't get in because I was, the VIX was so high, I was scared, okay? Now what you're going to see is that it pulls back the very next day. Oh no, it's horrible. But you got to remember is you make a higher high and then you tend to make a higher low. Well, when you do that, what color candle do you tend to get? And the answer is a red colored candle. Do not be afraid of a red colored candle, okay? You want to see when it does have a red colored candle, does the price stay above the moving averages? Does the moving averages act like support? You know all these things, but your feelings get in the way, don't they? Oh, okay. Now, what do we see the very next day? Well, what we see right there is a little hold, a close above the high of the low day. Now, what does this say, potentially, that we went down for a day, red candle, only the very next day to go hold the very next day? What does it tell us about momentum? It means momentum's stronger than we think. The pull down didn't have to go down very far, the red candle, before buyers came in to buy it again. Now, my emotions could have been, yeah, but I'm scared. We don't know what's going to happen. Yeah, this, yeah, that, yeah, that. Okay? Because the reality is a technician is not trading feeling. They're trading the signals on the chart. Okay? And that's what you got to decipher. Is this feeling or am I trading what's on the chart? And you've reached the fork in the road. Okay? So this would be a good point to say, I'm going to take one of the pass. Okay? Now, as we go forward, what do you see the very next day? Oh no, red candle. Breakout didn't work. Bounce didn't work either. Remember? Go back to what I said. Go back. When we see a red color candle, we want to see the red color candle stay up above what? Say it louder. I can't hear you. Yeah, that's right. We said support. We also said, does it stay above the moving average? Okay. Now, what did we also say before is what could act like a potential higher low? What do we say about that? Remember we talked about the whole idea as far as circling the red and green candle? Very advanced concept. No, I'm just joking. It's not. And then what did we talk about is we're going to draw a line from the open of the green colored candle. And don't say you didn't remember us talking about that because I showed about an example where we did 10 of them in a row, okay? And we said, hey, if this little momentum is going to hold, we'd like to see the price stay above 82.96. Go forward to the very next day. It falls down to the 82.96 area, slightly lower. And then what you're going to see is we get what's called a trigger day. Trigger day is where the stock has an up day, but it's not close above the high of the low day. Now, the reason why we're talking about this, kind of creating step 2 of diagonal breakouts, is I used to think that when we get the diagonal breakouts, I'm expecting a deeper pullback. I like a 5 to 8 day, 10-day pullback. But a lot of times you don't tend to see that. Why not? Does anybody know why a lot of times you don't tend to see after diagonal breakouts these like 5, 10-day pullbacks? Why don't you tend to see those? And the answer is because it's already pulled back and people are trying to get in. Okay? Now, so far we saw 1 day pullback, pop. 1 day pullback, 2-day pullback. So far, a little biting of interest. You go for the very next day, was that really cold? And the answer is barely. We could see the cold dot right there. So it did close above the high of the low day. Now that's 2 times that the stock has told us there's some momentum here. You go now, so here's the breakout day. Entry number 1, entry number 2. 1 pullback day, call hold. Yeah, but I'm waiting for a deeper pullback. I'm trying to kind of explain to you that thinking might not be proven, okay? We're trying to explain to you that when you get the diagonal breakout, if there is momentum and that breakout holds, you're going to tend to see pullbacks of less than 3 days, followed by potential hold setups. Now we go forward to the very next day, and then here's what we got again. Now, James, that's a hold, okay? So when we had the pull down days, red candle days, day 1, day 2, which day is the lowest? Well, you don't need a PhD to answer that question. I mean, that day is the lowest. When we look at the lowest days, are we looking at all candles or just the red ones that are recent? Answer, the red ones that are recent. Which one is lowest? It's the 18th. Now, James, why do you kind of get so animated about this? Because these little misconceptions stop people from trading what they're seeing. So that's why I'm trying to really nail some points here, okay? Now, you're going to notice that that was another hold. That's the third entry. This is actually the 4th because that's another hold entry. And then if you take a look at this, there's a little gap to the upside. Now, could someone trade the gap? Now, we know that there's close above the high of the low day, okay? And then we know that there's what's called close higher, which it did on Friday, and then it gapped. So that's what we call the CHG, okay? Close higher gap. Who created that lingo? I did, because when you really go back and study bullish bounces, those are the 2 main types of entries if you're trading on momentum. Now, to someone who's going to say something back to this, okay, is some people don't buy in any entry signals. They're just getting in. We're not talking about that. We're talking about when you get the stock to go to the upside, it's mainly going to come back to those 2 entry setups, a hold or CHG, okay? So if you're just buying out of thin air, okay, that's not buying on momentum. You're just buying on a price level. That's not what we're talking about, okay? Apple to apple comparison. That's not Apple here. Now, what you're now going to notice is here we are. So the point I wanted to bring out in doing this is a lot of times I used to feel like a loser. And what is a loser? A loser is somebody who maybe misses a potential opportunity. That's what we mean by loser, okay? And then I didn't understand that after that breakout that I might have another chance for a setup, and then I didn't realize it because my head was lower because I felt like a loser. And then I missed that one because I was looking for a deeper pullback. And then I'd see the pullback for 2 days and I'd be okay, I'm waiting for a deeper pullback. And then all of a sudden it started to bounce. And I just felt like a loser again. Okay. And then when it did this, I was like, now I'm going to have to wait for a deeper pullback because now I've missed the entry. It's already gone up 10% off the bottom. Do you see this vicious cycle that happens? Okay. It's like, what you've been waiting for, you finally get it, and then the investor struggles, like I did, to like trade what they're seeing because they're playing these mental gymnastic games on themselves. Now, I'll be honest, I don't like to play games. I hate games, okay? Family comes over and says, you want to play board games? No, I want to play the game of life, okay? I don't have time for games, okay? Now, the biggest actually thing is here, I want to kind of now bring up examples of what we're talking about, okay? So the Palantir would be something very good to kind of print off, staple it to your wall, and said, have I learned from this? Because I had to learn too. I hit a fork in the road, repeat that feeling of feeling like a loser, someone who misses opportunity, or do I want to try to take advantage of opportunity? That doesn't mean it's guaranteed to go up. Just the investors that are trading the technicals, they're trying to take advantage of those setups. All right, now, if we take a look at this, what I'm going to do is let's kind of now look at some examples of this. And I want to go back to BKR, and I'm going to test your understanding, okay? And now you have to tell me what I just taught you, okay? So you can't ride my back anymore and say, James is going to tell me. No, I'm not, okay? We're not playing that game right now. So let's say all of a sudden you drew this line and said, James, this is how I drew the diagonal resistance, okay? Because the reality is Barb's not there at your house. I'm not there at your house. It's you. We're stuck with us. Okay? Now, if I go forward to the very next day, you tell me where the breakout is. Just give me yes or no. Breakout yet? Yes or no. Okay? Now, what you're now going to see is if I extend to the right and we said, okay, there's the day. Is a breakout, yes or no? And the answer is no. We don't even have an open and close above the line. Is that a breakout? Yes or no? What's the definition we talked about? It's definitively no, because if we drew the line as follows, that's not an open and close above the resistance. This is like straddling a fence. Awkward, okay? But that's really what you think of it as. We open below, we rally. That's a good sign it closed above it, but it's not an open and closed above it. Next, go forward to the very next day. Red color candle. Now, what do we also notice on the moving averages below? What do we notice? Well, the shorter term moving average is going green. Does that mean check back in 3 months and see what happens? No, you get the shorter term moving average going green. We're starting to see the momentum come back in. Go forward to the very next day. Breakout per the criteria, yes or no. Okay, so step one met, right? Open and closing price above the resistance. Step two, can you remember what it was? Closing price above the open. Ding, 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 ding. All of a sudden, that's the first time per the rule set that there was a little breakout. Now, does that guarantee that that stock's going to go up to $100? And no, it's an entry setup. Okay. Now, so let's say the investor said, James, I missed that entry. I was on a cruise ship and there was no Wi-Fi. I was playing board games on top of it. Okay. Now, your job now, the takeaway from this class is to tell me where that high or low is. Tell me where that bounce entry is. Now, now the very next day, a little gap. Now, if you get that gap and you rally, obviously someone saw that and they probably know what CHE is. Okay, now, so that's a gap entry. Okay, now all of a sudden we get a red color candle. Now, what was the hook, line, and sinker for the average investor out there that they probably get mentally turned around? They look at this red color candle and they think, oh, red color candle bad. This is a trap. And I'm screaming when I say that on purpose. Why is it a trap? Well, because they think the red color candle completely changes the trend. They think the red color candle completely changes the breakout. The red color candle is exactly what it is. It just means we close lower than when we open, but the clarity that we want to ask ourselves, the question is, to how to be clear, to how to think about this more properly and not feeling, is when we had the red candle, did we stay above support and or the moving average? Now, we have to also understand that if we get a red color candle, the investor probably is going to practice buy stop orders, buy stop limit orders, and things like that, because those pullbacks might not pull back 8 to 10 days, okay? Why? Because investors are trying to buy on a dip in the price. When we say a dip in the price, we're really saying something that might only pull back 1, 2, 3 days. Now, I want to just stop for just a moment. Everyone huddle in, huddle in, huddle in. I've been doing this for 25 years. And if I could go back to myself and I would kind of take my ears, okay, I would grab, if I could grab my ears to myself and say, I would literally kind of cone them in like this. I would say, James, wake up, okay? Now, sometimes it takes years for us to understand this. Does it really need to be? The problem is no one taught me this, okay? I wish someone would have just grabbed me and said, wake up. Okay, remember I told you, this is not an area where you want to say, out of 10, I feel like I'm a 3 out of 10. Because remember, when you think about diagonal breakouts, they are essentially short-term flag breakouts, intermediate flag breakouts, diagonal breakouts, where the potential reward to risk might be a little bit more favorable. Okay, now if you're a fundamentalist, the price multiples are more attractive. Maybe the intrinsic value is actually greater than the stock price. I mean, a lot of that stuff. Okay, now, so it's not just if you're a technician. It's also if you're a fundamentalist as well. Now, we go forward. What do we see now? Okay, what do we see now? Anything? Is it just a green candle? No, not just a green candle. But what you're now going to notice is there's another cold dot. Now remember, the investor is saying, well, I want a deeper pullback. Well, they get it. They're probably not going to get a deeper pullback. Not if breakout holds, not if there's momentum. The very next day, what type of candle do we get? A bullish engulfing candle that closes above the high of the low day. Now, does that guarantee that the stock's going to go up because there's that entry? No, it's a setup, okay? Now, if we go forward to the very next day, green candle, next day, red candle. Now, all of a sudden, let's look at this again and kind of say, okay, so red candle, let's see if we can see the entry set up again. Now, where was the last higher low? Now, this is really going to test your knowledge. The last higher low is where we had the last red and green candle side by side. Where's the higher low, though? We're going to draw a line from the open of the green candle. If the investor is trying to look and see is that breakout still holding, they want the price to stay above 43.69. Okay? Go forward to the very next day. So far, what we see on this chart is it went right down to the open of the green candle. Now, who created that? I did. Why did you create that? Well, because I would look back to kind of see when things were staying in technical form, where were the higher lows typically? And when did maybe that trade start to break down? And the pattern that you saw was when you start to trade below or close below the higher low. The higher low is where you circle the red and green candle side by side, draw a line from open. And if you get that closing price below that 43.69, that trend is starting to sour, okay? Not great. This went down to that 43.69 and then seeing a little bounce here. Now, what I want to do is take the next about 13 minutes and I want to do a paper trade on this, okay? Now, what I want to do is I want to right-click on this, and what I'm going to do in this case is I'm going to go BKR. Let me go back to that paper money account, okay? And what I want to do, now, how many of you are realizing that this is going to be a class that you want to go back and review? How many of you are realizing that, okay? This did not take me one time to see it. It just took, just seeing the patterns over and over again. I think that's what's interesting is when you talk to someone who's traded for a long time, they've seen patterns. And a lot of times those patterns can play themselves out over and over again. Patterns do not mean that they work all the time, but it just kind of means that behind the patterns, there's people. Behind the patterns are computers, okay? Now, what I'm going to do that are actually trying to expose the patterns. What I'm going to do is I'm going to right-click on this chart, buy custom, I'm going to go with OCO bracket. Now, I'm going to speed this up a little bit, and what I'm going to do is I'm going to go into the IRA account. Let's go to margin for just a second, BKR, and let's say the investor bought 100 shares of stock, and let's say the investor said, James, I'm going to set the stop underneath that 43.65, okay? Now, if we took 43.65 less 3%, lower than 50 bucks, it's going to be 42.34. Okay, 42.34, dated GTC. Now, limit, dated GTC there. Now, sometimes what investors will do is they'll say, James, I'm going to try to target that prior high. see if it can swing back up to that prior high. Most of the touches are right around about $47. But if the investor said, James, I'm going to target kind of that prior high, maybe right about $49, put it right about right there, okay? Now, I want to kind of point something out. I'm going to leave this there for just a moment. But if we went back to IXE, the energy sector, pull that up, okay? If I pull up IXE, you're going to kind of notice we mentioned last week, energy kind of looks like, yeah, it's up near resistance, but kind of looks a little bit more bullish, okay? When you look at Chevron, it did actually breach out of resistance. We're just kind of wondering, could BKR maybe kind of play a little correlation with its big brother, Chevron, okay? Now, we're going to target the 49, set a stop at the 42.34, confirm send, and take that. Now, here's the deal. This is a calculated risk, okay? What's the risk of this trade? We could set a stop, but we don't know if it's exactly going to fill there. That's a risk to the stop. We've hit that aggressively over the last 2 weeks, okay? We're going to send the order. Now, what I'm going to do is I'm also going to go back to the one that we kind of mentioned last week, GE. Now, I want to kind of give you another in-class question. And we drew this from last week. We said, here's a high, here's a high, here's a high. And we played just kind of connect the dots, okay? Connect the dots. Now, we go forward. Was that a breakout? If that upper white line was the resistance line, was that our breakout per the criteria? No. Now, is it a horrible thing to keep on a short-term watch list? Absolutely not. It closed above it. We just want to see it open and close above it. Close the price above the open. So it's a start, okay? Now, what you're now going to notice is if we go the very next day, red color candle. Now, hook, line, and sinker for the average investor. Oh no, the breakout's not going to work. Okay, remember, it's hard to see the charts if we're crying, okay? So when we look at this, we're saying, we got a closing price above the open, and then we actually see, for example, a little red candle. Maybe this is what those investors mean by a little dip in the price. It doesn't really go down that much, stays right near the moving average, and the duration of that dip isn't very long. Now, we don't know what's going to happen the very next day, but if we go the very next day and we see a green candle above today's high, that day's high, someone was buying on the dip. Now, go forward to the very next day, what do we see? Now, calling all technicians. Now, by the way, Barbara actually has created some shorts on candlestick patterns. Calling all technicians, okay? Candlestick technicians. What type of candle is that? Yeah, now, you'd always like it to be more perfect, but you might say a little hammer time. Some of you got those baggy pants and all, okay? And you're saying, James, I like that tail, that lower shadow to be longer. But nevertheless, it kind of more looks like a hammer candle. Now, that could be that we're hammering out a potential support level. Now, all I'm going to do on this chart is I'm going to right-click on this line, extend it to the right, because you can't see the next day. Now, notice where the intraday low was near, right near our line. Somebody, okay, not me, I'm just saying somebody out there, was buying right off that diagonal line, maybe doing a little buy limit order, etc. Now, is that a hold? Yes or no? Yes or no? That's not a hold, okay? Because we had the red candle day there. There was only one of them so far, and we closed higher, yes, but it wasn't above that red candle's high. No. So the answer is no. Go forward to the very next day. What do we got? Okay, now, on the right-hand side, what do you notice? Okay, so if we had closed on this day above that high, that would be hold. What was this? Now remember, when you talk about CHE, close higher gap, okay, close higher gap, that's where you have a down day that's still above support. You get an up day that's it's up, but it's not like up that much, but it's a start, okay? And the very next day you see the stock price gap to the upside. Now, we know there's some investors that trade in the morning, and someone said, hey, look, we like the little breakout setup. This was the breakout. I'm going to circle that breakout setup. Someone saw that overnight in the morning, and they put their order in, overwhelmingly so, and it gapped the price. All right, this is your classic CHE. Now remember, cold and CHE is when we're looking for bullish momentum. Okay, now what I'm going to do in this case is, let's go back to this chart and say, is this where we are now? And the answer is yes. We're on the 24th, and that's where it is right now. Now, let's imagine when we look at this, the investor says, you know what? I want to come into this, and I want to do a trade. Let me back this off for just a second. Let's go back to that weekly chart here. Look at a 3-year weekly. Now, if you look at the 3-year weekly, remember we said diagonal breakouts can be shorter term flags. They could be intermediate flags, 2 to 3 weeks, 2 to 3 months, or longer term flags. Yes or no? Could we actually maybe say as technicians that this is kind of showing a flag-like potential pattern? Yeah, okay. Now that pattern, that doesn't mean that it's going to guarantee to go up, okay? And I've said that 5 times, but the biggest thing is it's just showing the pattern, okay? Now, the one thing you need to understand with it, like in the world of business or investing, is what you're willing to risk is your capital to see if that trend could play itself out. We need capital to try to play that trend. No different in business. The investors, business owners, they need capital to see if their ideas could work, okay? Now, what I'm going to do is I'm going to come back to this, and let's go back to that daily chart for just a sec, and I need help in kind of seeing what the target might be. Now, if I said, well, hey, we're going to consider an option trade, maybe a short, wide put spread. So when I say a short, wide put spread, we're really saying a cash secured put, but where there's some downside protection. What does that even mean? Well, we're going to sell a put, cash secured put, but then we're going to buy a put below. Now, in our example, we're going to sell, okay? We're going to sell, in this case, the 205 strike. Delta 36. Delta, again, showing, kind of explaining the probability of the stock being one penny below the strike at expiration. It's also showing in the short term, theoretically, what the gain or loss could be if the stock goes up or down $1. Delta, think it changing the option price over the change in the stock price, okay? Now, what I'm going to do is going to sell the 205, sell, going to go to vertical, and if we do sell vertical, we're going to come down here and do the 190 or so. Now, why the 190? Well, because when we talk about kind of the rule set that we practice, we're looking for a delta of 10 or less, okay? Something out of the money. Now, if we take a look at this, we sell the 205, buy the 190, there's the credit. This is kind of more your cash secured put. Now, when we do this, confirm send, what you're now going to see is that there's a max loss built into the trade because of the long put, okay? Now, do we want the long put to make money? No, don't want the long put to make money. It defines the risk and also reduces the buying power effect. How much money needs to be set aside to do the trade? Because of buying that long put, though, you got to pay an extra commission, 65 cents per contract, and that's why it says $1.30, not 65 cents. Now, what we're going to do is going to go ahead and send the order. Now, what I want you to do for homework here, and I think we've had a very good session. You've been very active, and I always like active. I ain't going to lie, okay? I don't want to teach people where they're like not paying attention. You guys and gals were locked in, and I just feel bad for Barbara, okay? Now, here's what I want us to do in terms of practicing, okay? I want you to go out and look and let's say, can you see a diagonal breakout and or a potential bounce in NVIDIA? Can you see one in MSTR? These are examples, not recommendations. Examples, not recommendations. I also want you to look at a stock like Seed. What happens if you get a stock that breaks out and it doesn't pull back? There's no red candles after the diagonal breakout and or moving average crossover. What could that mean? Flag, perhaps? bull flag, okay? So C and actually WFC, keep an eye on those as examples. What about a stock like Dash, okay? Can you see the diagonal breakout and can you circle the bounce entry spots, okay? And the last one here is Meta, okay? Can you draw the diagonal line and can you see the bounce entry spot? So last week we talked about diagonal breakouts. This week we're talking about the bounce entry after the breakout. Because like me, if you miss that bounce entry, then you feel like, hey, like I said, I felt like a loser because I missed the opportunity, okay? Here we want to take the education and say, what have we learned from these breakouts, and then get practice with them. Feel free to go out there and practice on your own stocks in your paper money account. Now, I'm out of my time here. Cameron May is coming up next. Also, feel free to go to the YouTube page. Our YouTube page is right here, Trader Talks with Schwab Coaching, and make sure that if you have not done so yet, subscribe. And also remember that Barbara Armstrong will be teaching later on today as well. I want to say thanks for all your comments and your questions and your participation. Very, very active bunch here today. Great job. Now remember, with what we discussed is done for example, illustrative purposes only. Today's session was focusing on the diagonal breakouts part 2, seeing those higher lows after the breakout. Okay? Don't be what James was, okay? That someone who missed the opportunity of seeing those. We wanted to kind of try to cover that hole of misunderstanding that I had. Stay tuned for Cameron coming up next. Take care. Bye-bye.